We were in conversation with Motherson Sumi talking about what has been the impact of the ceasefire. But the other important point to talk about with respect to the ceasefire is the fact that hypothetically, Mr. Sehgal, in case if the levies on imported cars in China are lifted, as has been tweeted by Donald Trump last week, what's the kind of benefit you expect to see? I mean, if you could talk about, in light of the fact that you have a strong presence in the United States, so what's the benefit you expect?
Well, I think we are basically in US supporting the US car industry. So obviously any market which accepts US car this thing, and that's good for them, is very good news for us. So looking forward to enjoying that.
Right. Sehgal, what's your view on the heavy-duty truck segment? Most believe even that is starting to peak, and the numbers last month to a great extent also sound of something similar. Do you share that view?
Yeah, I think basically we have to take into account market conditions which are there in US. The truck market has grown phenomenally over the last year and a half, 2 years. So definitely a bit of movement on the up or the negative side is part of the life. So really we are not too worried about it. Gives us time to course correct, to actually prune our plants and to take care of the new demand that's around the corner. So we don't see too much of a down or something like that, but a little bit of the numbers because of festivities, because of the holiday season, could be something which is in the normal course of events. But as of now, we haven't seen any much deviation. A little bit temperament is there because of the holidays, but that's about it.
Okay. Mr. Sehgal, what about weakness in European demand? Is that also likely to hurt growth? Analysts believe order inflow has to rise substantially above, euro 3.5 billion to for essentially a period of time to create a meaningful positive delta. Do you sense that? And I just want to add to that question that do you believe with this whole Brexit issue that things may slow down a bit through the transition or not quite?
Brexit, when that happens, it will happen and we will come to know the results of it. It's very difficult to really predict what's going to happen over there. So it all depends upon what the terms, conditions are and things like that. So Brexit, we'd like to leave it at that. Europe is a bit on the downside because of WLTP, and there's a confusion amongst the people as to what to buy. What is the benefits of buying a diesel vis-a-vis petrol or CNG, LNG. There's so many options that are there, or electric cars. There's so many options that the car makers, the consumers have. So I think there's a little bit of confusion that's there, but I think it sorts out itself in the next quarter, the next quarter. So one doesn't really worry too much about it, but yes, it does affect the demand a bit. But other than that, things are normal. As I said, in these kind of times when the demand slows down a bit because of the holiday season and the festivities and all that, we tend to actually improve our maintenance of the plants and things like that. So we get ready for the next big jump that comes in the future. So we are very, very comfortable with that. Regarding your question about America, we have plants in America. So the American story is very intact. We are not very much into America. So the customers that we are supporting, we see a reasonable demand that is coming over there. Nothing really to worry about, or nothing really to get too much excited about it either.
What can we expect the ramp-up benefits, to actually filter through? Do you believe new plant ramp-up can offer cushion?
Yeah, definitely. I think if you look at it, in the last quarter, you saw there was a big drop in the demand because of the confusions of WLTP and things like that. But yet Motherson still grew 11% on the top line and the bottom line as well. So I think the big advantage that Motherson has is that we have the ability to moderate whatever a drop comes in, because we have multiple content in the supplies that we do to the car maker. So that kind of makes up for it. Sometimes, you know, we do an acquisition, that helps us also. So all these variabilities which we can we get as the market gets tougher and tougher, we get all these particular opportunities. So, you know, it's good for us, and being a company which is all-encompassing and going for anything and everything, as long as it's within the OEM sphere, gives us tremendous amount of benefits and opportunities, really. So, one is always looking at the market in that way. If it's good, it's great. If it's not good, well, then the opportunities are great.
Great way of putting things out. Even for your investors, you know, that would be fairly reassuring at this juncture. Any slowdown seen from Maruti, given the bleak outlook for domestic PV players? How's your overall domestic order book looking like? And I'll tell you why. You know, last week M&M in its analyst call indicated that things could peak in FY20, which is, you know, which begins in about less than 6 months from now.
So, you know, we don't second guess our customers. They are facing the market directly. So whatever they say, definitely we pay attention to that. But more than what they say is what the numbers that we have, which we have to supply, we focus on that. So we are not trying to second guess them. They say that, you know, there's a slowdown, then we really reduce our production or something. Whatever the numbers that are coming to our plants, we focus on that. And for us, that is sacrosanct. So one does understand all the conditions that they put forward to the media as to what is happening. But we, as a supplier, will focus 100% on the orders that they place on us. And we feel that, yeah, they're a bit on the lower side, but that's okay, part of life, no issues at all.
Okay, but you think that things might be slowing down a bit, and that, you know, one will have to perhaps renegotiate contracts at all, you know, to kind of factor in any sort of price escalation clauses or anything of that sort if the environment changes, or that would not be the case?
I don't think that's going to be the case, because the fluctuations are not to that extent that we have to renegotiate contracts and things like that. That's like that's a bit too much on the other side. But I think we have to focus on what the customer needs, supply it just in time, just in sequence, so that you know, his line, his efficiencies are improved and better. And that's what we really focus on. So once a contract is with us, then it goes on for the life of it, whether it's 3, 5, 7, whatever is the year of the contract. We go on with that, with pre-arranged price negotiations and all that, depend upon the transfer and, you know, what kind of pass-through you have, and all these things are there. But really, we don't sit down and start negotiating every time there is a drop in the order or increase in the order either. So life is simpler, I think, if I can put it that way.
Question, Mr. Sehgal, you've extended your appointment with us, and I appreciate you being candid. But in the last few quarters, several OEMs, some of your key clients, have trimmed their guidance, which I had indicated earlier as well with M&M. Many brokerages have turned increasingly cautious on because of that. Talk to us about what's making you confident, and, you know, the triggers that you would be kind of watching out for into FY20 and more importantly FY21 as well, because we'll have a transition period with the new government too, perhaps new policies, a new environment, you know, and that would be pretty much the backdrop for business confidence building from there.